Hello and welcome to Business Africa. I am Afolake Oyiloye. On this week's headlines, Cameroon's insurance turnover 12.9% in 2015. Algeria Oil Group wins a lawsuit against Spanish Repsol at International Court of Arbitration over profit sharing. MTN accused of illegal funds transfer. Life insurance is on the rise in Cameroon, although this product represents only 28% of the insurance market in the country. Its turnover is more than 182 billion Franc CFA, which translates to a growth of about 12.94% in 2015. Jean-David Mihamle and Kenneth Karuri with the details.
Cameroon's insurance sector recorded a turnover of 182 billion francs, which is equivalent to $305 million in 2015, against 161 billion francs the previous year. According to data released by the Association of Cameroon's Insurance Companies, ASAC, this represents a growth of 12.9%. The branch that deals with fire and casualty risk generated a little over 130 billion francs, roughly the equivalent of $217 million, and which in effect represents 62% of the market for insurance in the West African nation. Although life insurance only represents 28% of the insurance market in Cameroon, this arm has continued its growth in recent years, buoyed by increased awareness of the product. Life insurance grew from 27.5% in 2014 and 25.5% a year before. In 2015, this branch achieved a turnover of just over 51 billion francs, a little over $8.5 billion. This is in comparison to 2014 when it recorded a turnover of 44.3 billion francs. The regulator notes that compared to last year, the branch has recorded an increase of 16% in turnover. The Association of Cameroon Insurance Companies maintains the insurance sector has more potential, despite the slump in global crude prices, which has affected most oil-producing nations, including Cameroon.
A landmark ruling by International Court of Arbitration has seen Algeria win its lawsuit against Repsol over profit sharing. Now, the lawsuit involved the Spanish firm Repsol, who questioned how Algiers retroactively changed the profits sharing with oil and gas. It alleged that Algerian state-run company was taking advantage of 2006 agreement to increase taxes on profits made. Michael Ojowo and William Bayer with the details.
The Algerian oil consortium group Sonatrach has won a lawsuit against Spanish Repsol in the International Court of Arbitration over profits sharing. The wrangle surrounding the two oil giant companies and two others is on profit-sharing ratio and tax payment module. Repsol and other companies allege that Algeria had taken advantage of the 2006 agreement to increase taxes on profits made. The companies filed a request for arbitration against Sonatrach in late May, which the state-run company had vowed to counter. As soon as the barrel price exceeded $30, the oil majors were seen to claim an additional tax ranging from 5% to 50% of the value of the production, which was concretely featured in the revised contracts. This was the main argument made by Sonatrach over tax disagreement with other oil companies. The same case was presented by French oil giant Total over the change of profit-sharing terms on oil and gas contracts profits made by foreign companies, which the Algerian government introduced since 2006. Total wants to recover almost $500 million, which is said had been paid into Algerian treasury. Sonatrach had argued that the special tax payment for Repsol and Total combined represents less than 0.3% of total annual production in Algeria. The case had been brought before the International Court for Arbitration. US Anadaco and Denmark's Max Oil went to arbitration against Sonatrach over the tax on exemptional profits, but subsequently reached settlement in 2012 worth some $4.4 billion and $920 million, respectively. Algeria, hard hit by the crash in oil prices, is seeking new investment to help it build up production from future fields and explore new areas.
Still as regard that report, we have an Algerian journalist and a specialist on oil and gas, Mr. Sahar. Welcome. Now tell us in few words, what's the conflict between the Sonatrach and the Western oil companies about?
The contracts were signed in 1990. The oil price per barrel was at $10 by that time. This was the agreement that was made during that period, and then contracts were signed. Then after, when we came to the year 2000, the oil prices then increased and became $30 per barrel. That is when the Algerian government introduced tax on windfall profits. This is the same tax principle that has been even used by the United States in the 80s.
Now, is there no risk of discouraging potential investors even though Algeria won the case?
African countries can always consult cabinet councils so long as it is in the framework of intra-African principles that can benefit all parties. This should not pose any risk to the investing companies that are involved, and it should be profitable to all parties. It should also benefit African countries because most states have lots of needs and demands. Though the current situation is not convenient to most states, just like any other countries in the world, African countries should also have their right share.
Well, thanks for sharing. And now, MTN, Africa's biggest telecommunication company, has been accused of repatriating about $14 billion from Nigeria without authorization. According to the Senate, MTN smartly beat Nigerians' financial regulatory laws by failing to obtain a certificate of capital importation. Adding that, the company exploited what is described as the porous Nigerian financial system by illegally moving money out of the country. Amakojo and Nassis Ndumbe have more.
The Nigerian Senate's Committee on Banking, Insurance and Financial Institutions is investigating an alleged illegal transfer of $14 billion out of the country by telecom giant MTN. Four lenders, Stanbic IBTC Bank, Standard Chartered Bank, Citibank, Diamond Bank, and the country's trade minister are also being questioned for their involvement. The upper house of Nigeria's parliament agreed last month to investigate whether Africa's biggest telecoms company wrongly transferred the money out of Nigeria between 2006 and 2016. The allegations come as Nigeria struggles with its first recession in a generation and chronic foreign currency shortages due to a slump in oil prices. MTN has said the illegal transfer claim has no merit. The allegation, according to industry watchers, threatens to raise tensions between Nigeria and MTN 3 months after the company agreed to pay a reduced fine of 330 billion naira in a settlement with the government over unregistered SIM cards. MTN is the largest mobile phone operator in Nigeria, which accounts for around 1/3 of the company's revenues. The company had threatened to pull out of Nigeria during the dispute over unregistered SIM cards.
That report brings us to the end of this week's show. Thanks for watching. The conversation continues on our social media platforms, both in English and French. Hope to catch up again with you soon. Bye for now.